Hello, my fellow investors, and welcome back to another fundamental and earnings analysis video. Today, guys, we're going to be taking a look at the company Procter and Gamble. They just had earnings the morning as if I'm recording this video, and they actually fell. Now, they didn't fall like a lot, but they fell a decent amount, as you guys can see right there. They fell 4.84% to the point that, you know, it's intriguing, right? It really is intriguing. And this is a company that I do like. It's a company I do own, and it's a company I would like to own more. For those of you who may not like them for controversial reasons, well, I'm fairly certain that you probably use one of their products without realizing that you're using one of their products. So we're going to cover all of this today, guys. And of course, before we get started, make sure to like, subscribe, comment, really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. And if you would like to join us on the Discord, the link is in the description below. Excuse me for not having a face cam, guys. OBS updated, and I have still not been able to to actually fix it, but I will fix it for tomorrow's live stream, which we're going to be live streaming the FOMC, at least the VOD of the FOMC. So with that said, guys, let's get started with this analysis. So let me show everybody their brands, because a lot of people don't tend to like them, and then, you know, they end up buying something in their brand that they don't realize that it's actually from Procter and Gamble. So we got here, guys, a ton of stuff. I mean, you got Gain, Bounty, Tide, yeah, Puffs. So if you get, tissues that are Puffs, that's from Procter and Gamble. Gillette, obviously, that's the big one. You got, let's see over here, Old Spice, right? Pantene, Head and Shoulders, that's also from Procter and Gamble. Cascade Dawn, Febreze, and a bunch of other stuff, guys. Look at this. They even have, if we come down over here, Crest, Oral-B, and all the way at the bottom, in fact, if we come over here, Safeguard, right? So germ protecting soap and that kind of stuff. So yeah, guys, they own a lot, right? They own a lot. It's a pretty big company, and I'm fairly certain that a lot of people, even though you may not like it, you have some of their products that I just showed you guys without realizing that it actually comes from Procter and Gamble. Now with that, let's actually head over now into their earnings summary to see how they actually performed today. So looking at the earnings summary, we got Procter & Gamble non-GAAP EPS of $1.40, beats by 3 cents, revenue of 20.53, misses by $210 million. That's what we've been seeing a lot recently, is that a lot of these companies, guys, have actually been missing by around the $200 million mark. This is, well, you guys can see that this revenue is down 0.1 year over year. A 1% increase in all volume and 1% increase due to higher pricing were offset by 2 percentage points of unfavorable foreign exchange impacts. Procter & Gamble expects fiscal 2025 diluted net earnings per share growth in the range of 10 to 12% versus the fiscal 2024 GAAP EPS of $6.02. Procter & Gamble expects its fiscal 2025 core net earnings per share growth in the range of 5 to 7% versus the fiscal of $6.59. This outlook equates to a range of $6.91 to $7.05 per share, with a midpoint estimate of $6.98, or an increase of 6%. The company said its outlook estimates a net headwind of around $500 million after tax from unfavorable commodity costs and unfavorable foreign exchanges. Net headwind equates to a 20-cent per share for fiscal 2025, or a 3% drag on core EPS growth. Procter & Gamble said it expects adjusted free cash flow productivity of 90% and expects to pay around $10 billion in dividends and to repurchase $6 to $7 billion in common shares for fiscal 2025. Guys, absolutely love this. I love when they themselves say, like, hey, cash flow is going to be this much. We plan to give out, this amount of money in dividends, and share and repurchase these amount of shares. So I look at this and I'm like, okay, this all seems very, very situational, right? The fact that they're expecting not too good, right? They're expecting headwinds. I see it as just situational due to the current economic situation, right? But in the future, I don't think that this is going to be a big deal. Now, for all those of you wondering, I will leave their actual earnings report in the link in the description below for you guys to read for yourselves. Now, with that, let's jump into now the calculator. We got the ticker for PG, market cap of $382 billion, a PE of 26.44, current share price of $161.70. Now, this current share price is actually really interesting. On the 1 year, they're up 3.45%, year to date 10.35%, but as of today, guys, down 4.84%. We are not near 52-week highs, but we are still on the high end of this range. So yeah, it's not looking like the best time to buy, even though it just fell 4.84%. If we take a look at this dividend, this is a yield, guys, of 2.37%, a payout ratio of 57.36, a 5-year CAGR of 5.88, and 67 consecutive years of dividend payment. Absolutely love this dividend growth because they are a dividend king, guys. Anything higher than 50 years, in fact, they're heading on near 70 years now. Anything higher than 50 years, it is considered a dividend king. And well, if we even take a look at their history, guys, I mean, if we take a look at even the max, they never, ever stopped issuing that dividend. Look at that. Now this goes, this only goes to 1989, but you guys can see that that's an insane amount of growth right there when it comes to the dividend. Of course, all their stock splits as well. So I think that they're very, very safe when it comes to, downturns, seeing that people will always need deodorant, right? People will always need these things that, they're staples, right? They're staples. Ex-dividend date passed as of July 19th. Payout date will be on August 15th, and they do pay their dividends quarterly. Come back over here, we can see that based off of this annual dividends per share of $4.03 and their current shares outstanding, they pay out $9.7 billion every single year, which we saw that their earnings report says that they're expecting $10 billion to be given out in the form of dividends. So there you guys have it. And take their 10-year average free cash flow, subtract this $9.7 billion, they're left with $3.2 billion for the 10-year average free cash flow. And in regards to the last year's free cash flow, they're left with $6.8 billion. These payout ratios are a little bit high. The 10-year one, it is 75.27. However, the last year's one, it is 58.85%, meaning that it's a little bit scary on the 10-year perspective, but we'll take a look at the graph in just one second. On the last year's perspective, though, I like under 60. Technically, it's under 60. So again, we'll see how the graph looks like, because this could just be heading down as the cash flow gets better, and even as they buy back more shares, which again, they did mention right here that they do plan to do for fiscal 2025. So now let's take a look at the graph, starting with the net income. 10 years ago of $7 billion to 1 year ago of $14.88 billion, increase of 111%. You guys can see that it's not consistently increasing, especially as of 5 years ago. It is increasing, but man, is it just stagnating. All in all, I'm going to have to give this a solid 75%. Looking now into the free cash flow. I do like this graph, seeing that it is increasing. However, it does have its ebbs and flows. We could see here 10 years ago of $10.87 billion to 1 year ago of $16.5 billion. That is an increase of 52% with an average of almost $13 billion. This dip here that happened from 4 to 3 years ago could be just due to the fact that I believe interest rates went up or COVID related, or even shortage related as well. With the whole container stuff, right? That could have been it as well. But ever since, guys, this has been increasing even higher than that of 4 years ago. All in all, I'm gonna have to give this let's say like an 80%. Looking now into the revenue. Now, not consistently increasing from 10 years ago, but from 9 years ago, it is not even from 9 years ago. It's from 8 years ago that's pretty much consistently increasing, going from $70.75 billion to 1 year ago of $84 billion, increase of 18.78%. Guys can see that starting 8 years ago to today, nice consistent increase. I'm gonna have to give this a 90% as a grade. Here are the assets as a reference only, kind of flat, slightly going down. The liabilities, it's kind of flat, slightly going up, so it's kind of the opposite. And assets minus liabilities, it's just stagnant, decreasing. But you can see that from 6 years ago to the trailing 12 months, it is essentially around the $50 billion mark. Average total assets of $121.2 billion, liabilities of $69.76 billion, and difference of $51.44 billion. I'm gonna have to give this, guys, an 85%. Looking now into the cash flow minus liabilities, this is flat. This is straight up flat. 10 years ago it was negative 55.57, and as of 1 year ago, negative $55.3 billion. The average is negative 56. I'm gonna have to give this, guys, it's flat. I really wish it was better. I'm going to have to give this like 80% as well. If it's not going up, it's not going down, 80%. It's good enough that I'm okay with giving it like a passing grade, right? Now, the shares outstanding. This is the one that kills a lot of people and people don't necessarily know about it. 10 years ago that is 2.7 billion shares, got billion with a B, to today of 2.4 billion shares. That is a decrease of 11%, guys. 11% in 10 years. The reason why I like this is because this is very, very consistent. Now, only from 2 years ago to 1 year ago is when they actually issued shares by around 100, a little bit less than 100 million or so. All in all, I don't see this as a bad thing. I mean, previous year to the current year is an increase of 2.16%. I'm going to give this, guys, once again, an 80%. Actually, let's go down to 75 just because I don't know what's happening right here. And this could be a little bit of an issue. But I mean, okay, to be fair, no, let me actually go back on that because to repurchase $6 to $7 billion. So they are planning to repurchase. Maybe they just issued that for acquisitions. I don't really see it as an issue, guys. I'm going to have to say, you know what? I'm going to say an 85% as well when it comes to, if I could type it, 85% when it comes to the shares outstanding. And lastly, cash equivalents, they currently hold 9.5 billion with an average of $8 billion. Overall grade, 82%, guys. It's a pretty good company, right? Fundamentally, very, very good company. Now let's see, valuation wise, this is where companies usually tend to fall, right? This is where they usually they're just not there. So is this a good buy to buy Procter and Gamble at the current share price? Let's find out. So now looking at the discounted free cash flow, this is already really interesting. Not adjusting for debt, $150, and then adjusting for debt, $144.72. Guys, let's input some of these numbers. So basically, for the projected share buyback, they've been buying back every single year, and it's very consistent too, at around 1.3%. So let's do 1% buyback. The positive just means buyback. The negative means issuing. So 1%. Let's go to 1.5, and then let's go to 2%. For the buyback. Now, for the growth, in the past 10 years, they have done consistently at around 3.23%. And you can see that that graph, when it comes to the revenue, is very reliable. Therefore, I'm going to go with a 2, with a 3, and with a 4. Yeah, I think that's very, very fair. Now, required rate of return. You guys can see that the numbers here are showing 213 to 301 and then 207 to nearly 294. Required rate of return, though, kills this because, well, the more you pay for something today, the less returns you're going to get in the future. So the required rate of return for a company like this, I'm going to say slightly beat the S&P 500 at 12%. And we get the numbers of $55.39 to $70.58, not adjusting for debt, $49.20 to $63.74, with a margin of safety of 5 to 15, $41.82 to $60.55. Again, guys, this is not financial advice. Every investment is the present value of all future cash flow. You guys are looking at this and you're like, this would need to fall by $100 in order for you to buy it. Well, based off of these assumptions, because let's just say that you believe that the revenue is going to go through the roof. Let's say you're going to go like 5, 7, and 9. Well, now you can see how much the shares actual or the share price actually changes by. Now, again, it really just depends up to you guys. But yeah, I do see Procter & Gamble as a little bit expensive right now. Even with this drop as we saw, I still find it very, very expensive. So that's just my 2 cents when it comes to this. Again, not financial advice. Every investment is the present value of all future cash flow. The calculator is available for your guys' own determination. Please use it and have fun with it and see as to where the revenue and shares will be in the future. And of course, the earnings report will be linked in the description below for you guys to read for yourselves. Now, if we take a look at this dividend, putting in $6,215, this nets you $154.89 in annual dividends. The yield, guys, as you saw, is pretty good. However, if we were to change this up here to, let's just say at around like, I don't know, let's just say like $120 right here, that would be $208.72 every single year. So that's a big, big difference. And that's still not even with like these kinds of numbers. So yeah, even though Procter & Gamble has come down, it would need to fall a little bit more for me to actually like it a lot more. So all in all, Procter & Gamble is a company I like, guys, a company I do own. I don't own a lot of shares, but it's a company that I do own. And I'm happy so far with them overall. If they fall, this is one that I would absolutely be buying a whole lot more. But anyways, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help with the algorithm on YouTube as well as normal. Make sure to follow us on X, Ask Fatal Investing. And if you'd like to join us on the Discord, the link is in the description below. Tomorrow or today at 7 p.m., you guys, we are going to have another live stream covering the FOMC VOD. So we're going to have fun with that one. And I wonder how many times I'm going to get pissed off at Powell. So make sure to stop by and say hi and join us on the stream. So with that said, guys, peace out, and we'll see you all next time.